Hello everyone and welcome back to my daily report market analysis videos with me, Richard Perry, market analyst at Hantec. On Wednesday the 25th of March we're going to look at euro dollar now, which has had a significant rally actually in the past day or so, really taken off. I talked in the daily report about the fact that yesterday's candle was a little bit disappointing actually. You had that rally to 108.85 area that pulled back into the close and actually, well, lost about 100 pips off the daily high into the close. So you were a little bit cautious on the back of that, but given the fact that this market is seemingly now building stronger and stronger positive candles, and again today we're trading up around about 50 pips, so that using that strength and continuing to go higher, this recovery is really getting going. We are still looking at the 23.6% fib level, 108.35, which is exactly pretty much where we sit now, as a gauge of resistance really, because that pretty much was the rally high or the initial rebound high that we saw on the 20th, which is Friday last week. Again, sort of pulling in resistance around that level on Monday, but breaking above that yesterday, but not managing to break it into the close. But I think if you close above 108.35, above that 23.6% fib level of the big correction, the big downside move, I think that really does start to really get the recovery in full motion. Now, the overhead resistance is still in place. You've got that around 109 big figure. You've got this big downtrend of the past 2 weeks in place, but the momentum indicators are beginning to turn a corner. Look at those stochastics beginning to cross higher. The RSI are back above 40, interestingly enough, as well. So it's starting to take on a more of an improving outlook. Now, I talked yesterday about this base pattern above 108.30. As I said, 108.30 was Friday's high and again became the resistance on Monday. It broke out yesterday, but not into the close. But as I said, we're sort of trading around that sort of level now, but we're taking it with improving momentum indicators. These hourly indicators are much better positioned now. The RSI is consistently above 40, pushing into the 60s. You've got the MACD lines, again, consistently above neutral. So it's beginning to take on this run of higher lows over the past few days. 107.45 was this reaction low that we saw yesterday towards the end of the day, but then picked up again from that, leaving a nice basis of support there, back above 108.30. If we close above that, you're looking at 108.85, and then 109.50 comes into the game as the next level of resistance. You can see overhead you've got 109.50, 110.50 as the basis of resistance overhead, and looking in as though that if the market can get above 108.85, that really is a realistic testing area for that. Also 109.63, 38.2% fib. If you clear our 23.6% fib, that really does suggest that 38.2% fib is in the targets. So I wish you good luck in your trading today. Click here to subscribe to our analysis videos and go to our website to sign up for our webinars.